All right. Hey, everybody. Welcome back. This is Dollars and Cents with David and Carlo.
What's up, going on? How we doing, man?
Another day in paradise. Let's go. So first and foremost, thank you guys for checking us out. We really do appreciate your time. And we definitely know that you will find value in these shows. So please continue to watch with us. We wanted to jump into the topic of annuities.
Yes.
Which is interesting because we've had multiple conversations on this. This is different and semi-new to me, but I think it's a very important topic. And, this is kind of, correct me if I'm wrong, but it's kind of geared more towards the families or the type of clientele who have their work history. They're on this side of their work history, right? Maybe getting ready to retire somewhat soon or looking at that now.
Yes.
And so we want to make sure that we address that demographic because it's an important topic to talk about. And so break down kind of for us what an annuity is, please, Carlo.
Yeah, absolutely. So we're going to keep this kind of macro, right? And then before we go into the micro, into the details of it. So an annuity is basically a contract between you, right, the client, and a reputable insurance company. Very much like a CD at a bank, right? It's a contract between you and the bank. You're going to give your bank a sum of money. In exchange, they're going to give you a return for 3 months, 6 months, a year, however long you're going to have that CD. An annuity works the same way. There are longer term contracts. There's different types. But that's all it is. Basically, you're going to exchange a lump sum of money, right, with a reputable insurance company. In exchange, they're going to give you either a guaranteed interest rate, some guaranteed growth, right, or more importantly, probably what it's mostly used for, guaranteed lifetime income. And that's really what I want to hit on with this video, where annuities do have a play.
Can I add to that? Just quick question. Is it also, correct me if I'm wrong, is it guaranteed against loss?
Yes, right.
Okay, and I want to make sure that we touch on, make sure that I had that correct as well, because that's very important to put out there.
So listen, so people get annuities for two reasons, right? Very, very simple. The first and primary reason that most people get annuities is guaranteed lifetime income, right? So when people say, hey, I have a pension from my company, that's an annuity, right? Social Security can also be seen like an annuity where you're going to be guaranteed a payment every month for the rest of your life. The challenge with many retirees that are coming into the marketplace, especially the baby boomer population, is that where they retire from, 90% of companies do not offer their employees a pension anymore. So what many people have is a 401k plan and Social Security. That is pretty much the landscape right now of the retirement industry, right? Majority speaking, generally speaking. So I do this all day, every day, and I deal with retirees. Hey, I'm 60, 62, 65, 66. I think I'm going to work another 4 years till 70 because I'm trying to max out my Social Security. And I say, okay, how much is your Social Security going to be when you retire? $1,200, $1,500, $1,800, $2,000, right? I mean, I would say the majority is going to be between that $1,500 to $2,000 range that I'm coming across. And I say, is that enough for you to retire on a monthly basis? No, it's not. I'm a little bit concerned about that. I'll say, okay, what else do you have in terms of assets? I have a 401k. And the average 401k, folks, this is kind of alarming, but it's true. It's about $100,000, right? And how far does $100,000 go in 2024?
Not far at all.
So it's unfortunate, and this is the majority of folks, right? So if all you're getting is $1,500 to $2,000 a month of fixed income, then you need something to supplement that, right? So what is an annuity going to do to help you? Well, we can take that 401k plan, also an IRA, we call it qualified money, could be a 403b, a 457, anything qualified by the IRS as employee-based retirement. And you can convert that into an annuity, and the insurance company is going to guarantee you payments every month for the rest of your life. So in a sense, you're creating your own private pension with your retirement account to supplement your Social Security. And you would be surprised that many people are now in a better quality of life to have peace of mind that they're never going to run out of money. Because if you don't know this by now, folks, your 401k is not guaranteed to last you the rest of your life.
Right.
You could lose it in a market crash, which we'll talk about principal protection. right? Even if you're earning a interest rate, you could run out of money because you're taking out of that thing,
More
and all of a
than
sudden,
what it's growing.
yep, you
Right.
find yourself in your 70s and 80s, and you're like, man, all I have is Social Security, and the cost of living has continued to rise, and now it's affecting my quality of life.
Right.
So you might want to consider an annuity if you're concerned about your income needs when you retire, because even though you're no longer working for a paycheck, you're still going to need a paycheck. You're still going to need income. We call it mailbox money.
Mm-hmm.
And you want to have that guaranteed, and that's what an annuity will give you.
I think if protection against loss is important to you, you should really start looking at this. I mean, really, first and foremost, that's what it boils down to.
That's the second largest reason to consider an annuity, is because of principal protection.
Mm-hmm.
So we talk a lot about index universal life. There's different types of annuities that we'll get in on a different video, but one of the big ones that we do are indexed annuities that they also mirror a stock market index like the S&P 500.
Mm-hmm.
So they can grow and earn a market-like return. However, if the market crashes, your money is 100% guaranteed from any loss.
So let's go back to the example that you used of somebody who has $100,000 in their 401k. They're 60 years old. They're going to retire in 5 years at 65. Yep. Within those 5 years, that 100,000 is being played on the stock market. There's no guarantee against no loss.
No, not at all. Yeah.
So if the market tanks,
kaput.
Number one. Number two, in 5 years, hey, I love this question. Do you think taxes are going to go up or down in the future?
Oh, yeah. Taxes are going to go up.
And you're going to get taxed at whatever the tax laws are at that time, right? You don't get grandfathered into anything.
100%.
So, and it's pre-taxed money. So number one, there's still a potential for loss on your 100K, right? It's pre-tax money, so you're going to get taxed when it comes time for you to start taking out the RMDs.
RMDs are, the IRS says
required
you have
minimum
distributions, right? So if you do not start taking money out of your qualified accounts, 401ks, IRAs, by the time you're age 73, the IRS will penalize you. It used to be 50%. Right. So let's say you have to take out $10,000 per year, that's a required minimum distribution based on IRS law. Mm-hmm. Right now, they dropped it down to 25%, but it used to be 50%. So let's say, I don't need this 401k. I want to try to keep it growing because I might need it later. Well, you're 73. It doesn't matter if you need it or not. You got to start pulling money out because Uncle Sam wants that tax.
That tax money.
Right. So you imagine before it was 50%. You say, well, I didn't take it out. Well, now you have to pay a $5,000 of that $10,000 as a penalty for not taking out RMDs.
And then you're going to get taxed on that $5,000.
Yes.
Less.
And then you're going to get taxed. Right now, they dropped it down to 25%.
Right.
Okay. So, but you have to know you have a window of time.
Right.
Right. And we've been in a bull market since the 2008 market crash, folks, right? I mean, it's 2024, and the market has gone up and to the right for over a decade now. And what goes up doesn't go up forever.
No.
Right? So 2026, 2027, we are going to have a recession again.
Yeah.
Okay? The market will crash. It's inevitable. And if you are in that 5-year window about retirement and you are going to be heavily reliant on your retirement plan, such as your 401k IRA to retire, it is imperative of you to say, I need to protect this money.
Yeah. Printer goes burr, but not forever, man.
No, it doesn't.
It can't not continue. That Band-Aid can only get as big as it is right now until that's it.
A reckoning is coming.
No doubt.
I am telling you, folks, right? So it might not be in 2025 because of the interest rate cuts, but come 2026, 2027, we're going to see a market crash.
Right. Agreed. 1,000%.
And you want to protect that, right? So that's the biggest aspect of annuity is, number one, it's going to protect your retirement so you won't lose a single penny if the market crashes. But what if the market continues to run? You're still going to be able to be in a position to make market-like returns.
And you keep those gains.
Yes.
Right? You don't lose those gains, unlike the stock market where you might gain X amount, but if it takes and tanks, if with an annuity, you keep those gains and you're guaranteed stop loss.
Absolutely.
Right?
Absolutely. And when you're ready to retire, it's going to convert into a guaranteed lifetime income stream.
Right.
So there's potential. Money. There's potential for it to be higher than what it currently is. So imagine you added another, $1,000, $2,000 a month on top of your Social Security to give you that mailbox money to have guaranteed income for the rest of your life.
Right. So we talked about the difference between preservation versus accumulation.
Yes.
Right? So elaborate on that a little bit.
That's a good, thank you for asking that question, right? So when you know, the way the traditional financial industry has really wired everybody is we're saving for retirement, right? We're saving, we're trying to accumulate, earn as much interest as we can. But once you reach the end of the yellow brick road and you're like, okay, I'm no longer working, I need to now pull this money out. It's not so much about accumulation anymore. What's the stock market return going to be this year? It's really about preserving what you have.
Keeping what you have.
You want to keep it. How do I make this work? And we're moving now from accumulation to distribution. How do I take this money out? How much can I take out? How long is it going to last me? What are taxes going to look like when I start taking this money out? What if I die? Who gets this money? How much do they get? These are questions that you may have and you don't know the answer to.
Right.
And so distribution strategy when it comes to your assets is very important, right? So you want to sit down with the professional, someone that can break that down for you, Barney style, to understand your specific situation, to customize a legitimate distribution strategy so that you have a legacy plan. If you pass away prematurely, who's going to get this money? You know, you have peace of mind that you're not going to run out of this money, right? When you're 80 years old and like, oh my gosh, I'm broke and I'm 80. I don't have time to go back to work. Who's going to take care of me? This is happening, folks.
Well, and to drill down, and we've spoken multiple times, but if you don't pass away, but you can't work anymore for whatever reason, you want to protect your assets and your properties as well.
Yes.
Right? Living benefits and whatnot. So there's so many options on the table to help you guys out and help answer these questions, but it really boils down to taking that first step and really getting serious and wanting to get serious about learning what options are available to you. And so, you know, I behoove you guys to learn more about this. Please continue to watch this show because these are important topics to you guys. We definitely don't want to come across as alarmist, right? It's just reality.
Yeah.
You know, these are real serious topics that, you know, most people our age need to start thinking about. In 10 years prior to us needs to start thinking about.
Absolutely.
You know? Yeah. So they're serious topics.
And we'll meet you where you're at. You know, that's the thing. It doesn't matter where you're at. We're trying to maximize what you're working with to the benefit of you and your family so that you have peace of mind when you retire.
I love that. This was a great introduction to annuities. We're going to be talking more about this, but we wanted to touch on this subject because it's an important topic. Again, for those of our listeners who are maybe sunsetting and on the other side of their careers, again, it's about preservation of your income, your assets, versus accumulation. So we want to touch on this. We're at the end of this particular show. So thank you guys as always for hanging out with us. We really do appreciate it. Please continue to reach out to us with any and all comments, feedback that you have. I just started reminding myself, don't forget to like and subscribe to this show. I think this is the first time I said that.
We got to do those call to actions.
Yeah,
right?
we need and would love more subscribers and people to watch the show and share this with your friends and family on Instagram. We throw out videos to them.
Let me throw this out. Not only subscribe so you're continuing to get this content and whatever platform you're watching this on, you know, but again, reach out to us for a customized, complimentary illustration of your financial situation. Guys, we don't charge. We're going to help you and meet you where you're at, get your questions answered. No rush to move forward. You just want to understand your situation, and we will do that for you on a 100% complimentary basis. So reach out.
Put a plan in place. We're the easiest people get a hold of. Cool. Thank you guys again. We'll see you on the next episode.
Peace.
Peace.